This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Where we want to educate you about our market, empower you to make wise decisions, and help you engage with our expert contributors. When you come on the program, I want to talk about this new tax law. That's the big thing for me. Let's talk about let's talk about all the good news that we have for people. The standard deduction's big now, right?
Standard deduction's big. It's nearly doubled. It's gone for married filing joint from $12,700 to $24,000. That's huge.
That is huge.
If you look at the new tax law, everybody is going to benefit.
Okay.
Everybody in every tax bracket, in every income threshold, every income level, everybody will benefit from the new tax law. Yeah, the standard deduction is doubled. Married filing joint again is gone from $12,700 to $24,000.
Right.
Head of households has gone to $18,000. Singles is $12,000.
Okay.
In prior years, if you couldn't itemize your deductions, you were subject to that ceiling of $12,700. Now you get to take the $24,000 off your income, and your taxable income is just decreased by almost $12,000.
And then there's also new depreciation rules. That you were talking about that briefly, but tell us about that. What does that mean?
The new depreciation rules that helps the business owner.
Right.
In prior years, if you bought a $750,000 piece of equipment, you got to depreciate it $375,000 right off the top.
Okay.
Now, if you buy that $750,000 piece of equipment, you get to depreciate the whole thing $750,000.
Right then and there.
Right then and there. Now it applies to used equipment.
Interesting.
So if you go out and buy a used truck that you use in business, you can depreciate it 100%. Also, in prior years, we benefited from what was called Section 179 expense.
Okay.
And that was where we got to depreciate any of these fixed assets 100% in the current year, to the extent that you had net income. So let's suppose you bought a $1 million piece of equipment and you only had $750,000 net income before depreciation.
Right.
You could only depreciate that asset $750,000 to take you down to zero net income.
Right.
And so this is the big thing with bonus, is that you can take your net income to a negative, to a loss.
Wow.
So if you had your net income of $750,000, you bought a $1 million piece of equipment, now you have a $250,000 loss. One of the downsides is that they've gotten away from personal exemptions. So here's your free tax tip number 1 today. If you're having kids to save taxes, quit having kids. The personal exemptions that we were able to realize on our prior year's tax returns is now gone.
Mm-hmm.
There are no personal exemptions, and however, it was replaced with an increase in the child tax credit.
Okay.
Child tax credit in prior years was $1,000 and had a very low ceiling before you didn't benefit from the child tax credit.
Right.
However, that ceiling has been raised substantially.
Okay.
And the child tax credit is doubled. We were mandated to get health insurance. And if we didn't have health insurance, we were subject to a penalty.
Right.
Well, here's tax tip number 2. If you've been buying insurance so that you can save on the penalty, you can quit buying health insurance.
Okay.
The penalty's now gone. Yeah, and in the most recent past, we've been subject to a floor of 10% of our adjusted gross income before we could recognize any medical expenses.
Right.
That's now changed to 7.5%.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld. Thanks for listening, and remember to tune in every Tuesday at 9 a.m. right here on AM 720 KDWN.